are looking at their book and they're saying, oh, we had one of the best years ever. Go ahead and lock in some gains, lock in the bonus, and kind of reset for January. My expectation is actually January comes kind of screaming out of the gates.
If it goes above 104K, it's probably invalidating that entire thesis. So we won't need to wait for another year to figure out if we're right or wrong. We'll need to wait to see if that bounce clears.
But I think people are looking at the alt market and they're attributing this 4-year cycle concept, and they're saying, this could play out because the altcoin markets are going down. Meanwhile, Bitcoin and ETH are holding up.
I actually kind of think that this next run, ETH could break all-time highs before Bitcoin.
Welcome back to The Roll-Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face-to-face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Boys, hello. Welcome to the show, guys. Good to have you.
What's up?
Good to be back.
We just did 2.5 hours of prediction market. It's not gambling. It's a new form of trading, actually. Mm-hmm. And I think I lost a couple $100, Rob lost a couple $100, but our boy PMT came out on top like 500. So,
wow. You guys mess around with prediction markets at all?
Every once in a while.
Every once in a while. I've dabbled, have some good experiences, but not anymore. Former times.
Did you guys do any of the any Polymarket or Kalshi rounds or anything? Or
no, we're washed, so we didn't do anything. But
exactly.
We do like to partake in them, and big fans of Shane at Polymarket and kind of just the entire complex.
Yeah, it's cool. Yep. It's cool to see. People are describing it as a super cycle, and it really feels like it's what the next call it a casino, whatever the next one is going to look like. That's but it also is giving news and like more social elements as well. So it feels like it's more than a casino. It feels like there is something more there. So we'll see how the data shakes out. What have you guys been tracking the last couple weeks since we had you on last time?
Not to bury the lead, 25 bits cut here today, guys. People are wondering what's going on. If we're going to pump, is it enough? Is this QE? We've bounced off the lows here. How do you guys read the FOMC? Has your views changed on kind of the general Fed policy at all over the last 3 months?
I mean, 85% chance that this is exactly what was going to be what ended up happening. I think it was pretty priced in, the rate cut. Also the dissents. I mean, I think that was one of the interesting ones, 3 dissents. Mirren obviously wanted 50, and then, had a couple people who didn't want any. So I think we're in the middle of a transition period for the Fed where we're going to find out, we'll see if we get an announcement of who's going to be the next pick by the end of the year, as Trump says. I think that has the potential to be pretty bullish depending on who he chooses. I think markets will front run expected changes with some of the candidates that are being floated around. And I think broadly, the crypto cycle, as we've discussed, is more connected to the macro cycle probably than ever before. And what we have described previously is, in 2021, you had 90% of capital was retail capital in crypto. 10% of it was institutional. And then what has happened over the last 3 years is that 90% that was retail is now down to 10%. And you've got 90% of the capital is now institutional capital. And that's from the ETFs. That's from, digital asset treasuries back in the summer. That's from, participants who are, Vanguard is now stepping in. Like these are real players with, trillions of AUM. And what happened on 10/10 was that remaining 10% just got eviscerated. It's down 80-90%. And I don't really foresee that coming back, or at least in real size or very quickly. And so I think we're kind of in like a transition period for crypto as well, where the macro and sort of the institutional perspectives are what's driving market forces. And what I think that actually does is it officially breaks through the 4-year cycle. And the way that we will know that this has officially happened is maybe it's December 10th, a little too early for prediction, but I'll still predict something. I think next year we break through all-time highs for ETH and BTC. And, things like, we'll get into it, but the staking ETF, some of the positive movements there, on the ETH side, I think there's going to be a lot of positive catalysts in 2026, and so I think that's kind of the general read of the market is this was expected today with FOMC. I agree. I think the 40 billion a month with 3-year tenors is actually pretty dovish and pretty positive surprise. But I think the biggest thing is going to be someone like a Hassett getting announced by the end of the year, by May coming into the Fed chair role, and markets are going to front run that.
So Michael, I agree with you. I've got my fuck you higher hat on. I'm a bull for 2026. I think Andy needs some convincing.
Yeah, I guess. As I've been I've been bear holding real hard the last couple weeks.
Are you like short, or how do you?
No. I just we had a really good run the last 2 years, and like I got PTSD bad from 2021 and 2022. So I've gotten very cozy, and my allocations typically look like 90% crypto. I have this property in Florida and some gold and some tiny bit of stocks. Now it's like zero cash ever. Now it's like, okay, I got like 40% cash, maybe like 40% crypto, this property and some stocks and some gold. And so it's like, oh, I can freaking breathe now. Like it feels like I just like, so it just feels good to be cozy. And then we've got a boatload of taxes. But I just don't know how quick we're going to get back to all-time highs. Like I don't know if that's going to be Q1, Q2. I'm bullish like later on next year, but I'd push back and say I think we could see Bitcoin in the 60s for sure, 60s to 70s. Yeah.
Really? I mean, what would be a catalyst that drives it down that far? Other than I could see like a macro exogenous. I mean, this is kind of the way that we sit around and talk about where the markets are going. It's like, what would be the things that could drive that? And there are some answers. There are some kind of exogenous factors, but it's hard to point to anything macroeconomic that you see on the.
I agree. It's really just like charts. It's just really weird dynamic where the technicals and the technical analysis are all like, oh, distribution's happening. And like, it looks really, really dark. And then you go to all the fundamentals and all the liquidity factors and everything that from the macro perspective paints a completely different picture. So it's just a weird dynamic. But look, I'm happy if we go up higher. I'm very cozy. I'm just super cozy.
You say that now, but like, let's just sit with the fact that you're in 40% cash for a moment.
Dude, I am
Then
good,
you
man.
run a crypto podcast.
It's been 6 years, like tits long, man. It's too much.
I know. How old are you?
26.
Oh man.
Well, look, I think there's there's a very important feeling to experience of just like taking some size off and taking a step back, maybe enjoying the holidays. I don't discount the value in that in the slightest. I do think that what we'll probably see in 2026 is actually something happening faster than something happening later. Given all of the working through of the Fed chair, given all of the positive. I think what has also happened is the AI CapEx build out camp has been very intrinsically tied to the crypto camp. And, this is from remaining vestiges of like Bitcoin miners becoming AI data center operators, but also just like a lot of the same kind of speculative interest. And so I think, as that happened, paired with, as the CapEx kind of blow up happened, whatever it was a month ago, paired with a expectation of this being the end of the 4-year cycle, that's why you have this 30% sell-off. And at least right now, it's been contained at a 30% sell-off. My expectation is that it maintains that 30% sell-off, and then it just becomes another, garden variety 30% sell-off on a way to a new all-time high.
Yeah.
But I think if we're going to see movement, it's going to happen sooner, because in January there's going to be a catch-up trade. There's a lot of people who are probably taking tax losses, or they're probably locking in gains. Pod shops are looking at their book and they're saying, oh, we had one of the best years ever.
Yeah.
Go ahead and lock in some gains, lock in the bonus, and kind of reset for January. My expectation is actually January comes kind of screaming out of the gates.
I'd love that. That'd be epic for the business, for the bottom line. We've been on an up-only trajectory here. We got to keep it up. I'm a little bit worried about that too. Guys, I had a tweet. Coinbase institutional speculative excess has been flushed out. Our systemic leverage ratio, which tracks purely speculative positioning, has stabilized at about 4 to 5%. of the total market cap, down from about 10% this summer. Lower leverage equals healthier market structure, less vulnerability to sharp drawdowns heading into year end. I think this also supports your view there.
I think the thesis remains unchanged. Bitcoin is digital gold, whether you like it or not. It has the flows and institutional backing to support it. It's IBIT's #1 revenue product. Do you think Larry Fink is going to let that go to 60? I would probably doubt that. Trump also has put a lot of his reputation on the line for Bitcoin, and there is some sort of Trump put. And I don't think he can let it really go to 50 or 60K and remain with the movement intact, as well as with midterms coming up. And you see similar things with ETH. And frankly, like, it's been interesting to see how quiet the timeline has been as ETH has outperformed Bitcoin since the bottom, whenever that was, probably 2 months ago. It just speaks to a lack of crypto native participation in this rally, and the fact that most of these people are irrelevant. And I think, you see kind of like people bickering, on crypto Twitter about, are L1s overvalued or L1s undervalued, all this sort of stuff. I think they're doing that because they know that the stakes are so low, and they know that they're just like not really building anything. They're just kind of like fucking around trying to get attention. And I think you should couch all of your consumption of media with like the idea of like, why are you reading this? Like, why is this being put to you for consumption? And I think once you understand that, you'll be able to interpret a lot of what the internet throws at you in a better context. But the context, if you are frankly like a boomer, is almost more valuable. Gold is cool. Bitcoin looks like that. ETH is #2, seems to be outperforming. There's a catch-up trade there. And then I think for the rest of the alt complex, they have been shot in the head one by one. And it kind of like, you can think of it in terms of, the market goes one by one. They pick people off. There's bad unlocks. There's bad narratives. There's been a regime change in what crypto deems as valuable. And hype kind of getting it in the face over the past week has been kind of the final nail in that coffin, where nothing can defy gravity. Nothing can defy the unlocks. And so you have had a wholesale resetting of sentiment within the alt complex as well. And crypto is really only possible, or the only sort of rallies that crypto can produce are these hyper concentrated 2 to 3 assets per year, going 10 to 50x. And it's usually different assets each year. And so Solana had the big year in 2023 and 2024. Hyperliquid, obviously, I think was the coin of the year in 2025. And, if you're still spending time in crypto and you're retail at this point, the game is not going to be made or won on just ETH or Bitcoin. I think the game is going to be won or lost for the most part in terms of what alts you allocate to. And alt season is not pick a random cryptocurrency and go 100% all in and see what happens. Alt season is like, just think about it. Like, did you think about it? And a lot of the decisions that I see being made with crypto retail, they really haven't thought about it. And it's not just like what founder is like a Chad, that's not what it's about. It's about like, do they have revenue? Do they have fees? Can you open up the hood and understand, are those incentivized fees? And I think a lot of people are going to make a lot of money if they do the work. But I think constitutionally, Gen Z and millennials are just allergic to doing that sort of deep work, which is really unfortunate.
Thanks, Vance. No, really appreciate you guys coming on today. Just absolutely.
As a whole, I'm not saying you guys, but I'm trying to pull people out of the ditch.
No, I hear you. And I mean, look, I've been selling over the last couple of weeks I kind of started in August in chunks because I basically took 0 profits up until like August of this year. I was just so long. And I see this tweet. It's Ethereum whales and sharks accumulated 934,000 ETH, which is about $3 billion over the last 3 weeks, while retail dumped 1,000 ETH, pushing ETH up 8.5%. So is the thesis here on this kind of like breaking the cycle, retail selling into this 4-year cycle idea? Institutions don't really care about it at all, and they will just buy whatever you sell to them because to them it's a 15-year cycle, not a 4-year cycle.
Precisely. But here's the other thing that I will say. Retail matters a whole heck of a lot less now in terms of assets versus institutions. But institutions are very slow. And think of the institutional phenomenon as basically just like a global TWAP. And it's a global TWAP on assets that frankly, you could probably say are whatever the BlackRock spot ETFs are. And, right now that's basically Bitcoin, Ethereum, and then staked Ethereum, whatever that ultimately ends up becoming. But if you're not in that, it's hard to get that institutional kind of check or vote of confidence where you've got this slow but pretty huge TWAP that's on. And so when you see dips, like a 30% drop that we've seen, that's basically just like all the people who thought that we're in a 4-year cycle try to rush for the exits as soon as they possibly could, which supersedes the amount of inflows that institutions are going to be able to pick up over that period of time. Retail moves fast, institutions move slow. And so what you're starting to see now is basically just like the pick back up that institutions have because there's no more retail to sell. Or at least people are not as afraid as they were. And it wasn't 2 months ago. It was literally 2 weeks ago that we hit the bottom. But, that I think is, it's past us now. And I think we've seen kind of the negative market fervor in that one day where it hit 81K. Vanguard, one of the largest asset managers in the entire world, who's been so anti-crypto, waits till literally like 5% off of the Pico bottom for Bitcoin to say, okay, we're blessing this. It's now open. We're open for business. And I think that there's just so many positive catalysts, not only on like the macroeconomic side, but just like the institutionalists who are adopting this front. Like we still haven't even seen, just like here's other things that we haven't talked about in a while. We haven't seen any of the ETH DATs, basically Sharplink and Bitmine, raise any debt. Like they haven't gone off and done any of that. What if they come out with a $2.5 billion debt offering and you got like, great, we're just going to go spend $2.5 billion to buy ETH tomorrow. Like all of that type of stuff could happen on a Wednesday. I think we also don't know exactly we kind of get bits and pieces, and it's political for sure, but what people are completely discounting is what the Clarity Act or the market structure bill will be. Like our expectation is that passes in January. There's too many people that have like career writing, I guess, momentum on that, happening in general. Once that happens, in the same way that the Genius Act basically paved the way for everybody and anybody who's a regulated financial institution to like do any sort of stablecoin, operation or business or discovery, proof of concept, that same thing's going to happen with any asset in crypto that's not a stablecoin. And I think what we're missing as we talk about fundamentals, and we talk about this, with our investors all the time, but what we're missing is like market participants who are liquid, who understand what they're buying, understand what they're selling, but what they really need is a valuation heuristic to know whether or not something is overvalued or undervalued. We haven't had this ever in crypto other than value accrual, revenue, cost, profit, token, buybacks or whatever value accrual mechanism exists. And now that we have that and it's built in and it's scaling, if we were to systematize that and normalize that, you're going to start to see like the major hedge funds of the world trade this stuff and make markets efficient so that everybody who is trading this stuff or looking at this stuff and owning this stuff will know, okay, well, if I make $100 million of revenue and most of that's going into token buybacks, I should probably be worth a couple $1 billion. Like, that's just how this will work. And so I think, that's kind of the element that we're looking forward to as well. Whether or not that fully, that vision gets fully realized in 2026 or it takes longer, it probably will take a little bit longer, but I think we start to see some of that movement in 2026.
Take control of your coins with Trezor. Military-grade security for your digital assets. Go to Trezor.io for the new Trezor Safe 7.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
Halliday is unified crypto payments. Give your users more wherever they are. Go to Halliday.xyz to never write a smart contract again.
So the 4-year cycle is a bit reductive. It was born out of the Bitcoin halvening and block reward schedule, and that's becoming a less significant part of Bitcoin. But I think people are looking at the alt market and they're attributing this 4-year cycle concept, and they're saying, this could play out because the altcoin markets are going down. Meanwhile, Bitcoin and ETH are holding up, and that is breaking the 4-year cycle. And I think you're right. People are looking at what is going to make everything go up all at once. And there isn't a macro complex. There isn't Bitcoin dragging everything up. This is very secular and becoming where the winners are separated from the losers, unless it's clarity. And clarity gives us some market structure bill that could basically boost everything up all at once. I'm curious if you guys have a little bit more of a nuanced perspective on the winners and losers of Clarity. The timeline is helpful, thinking that it could come in Q1, maybe even January. But where do you think Clarity draws the line? Which projects or types of projects are most positioned to benefit, and which ones aren't positioned to benefit from Clarity?
Do not say Sky, please.
It looks like I just disagree with the idea that this is going to be a rising tide that lifts all boats. So like, let's throw that idea out just basically immediately. And it's very easy to tell who the winners and losers are. And there's so many more losers than there are winners. It's not even possible to describe it. Maybe it's 1 to 1,000 winner to loser. And, you know, the Skies of the world, the Hypes of the world, maybe the Uniswaps of the world, there's the deflows of the world. Like there's like, you can count them on one, maybe two hands.
What is it about those projects that make them winners versus
they have revenue and they have earnings? It's like, it's not like this like unknowable feature of the universe where we just can't tell, like we don't have the knowledge or technology. It's on chain. It updates every 13 seconds. It's very easy to tell who the winners or losers are going to be, but there is kind of these value traps that have been a historic feature of crypto that it's going to be important not to fall into. So like one value trap is something that has fees but is not growing. Another one is something that has fees but is extremely small. So that's not going to be of interest to an institution. The holy trinity is revenue that's growing, earnings that are real and able to get what's called operating leverage as revenues grow. So you have better gross margins, and something that is defensible. And I think there's basically 3 or 4 of those projects, and the rest of the industry will gradually trend to zero. And I think that will be basically the antidote to so many tokens being launched over the past few years, where everyone that is in crypto has been burned on this idea of there being any sort of breadth to the market. And that's what produces these hyper concentrated rallies in individual coins once people get comfortable with the entire narrative story and fundamentals. So I think Clarity will really, you know, kind of continue to produce even more concentrated rallies. And then after that happens, you will have probably newer projects that come out that comport to Clarity that are eligible to be bid. I would also say, like, stepping back, you have to understand how different the macro is from the last time that we discussed the idea of the 4-year cycle, which was in 2022. And that is basically, one sec, let me turn off my alerts. So like a war starting, you know, versus wars ending. QT starting versus today, QE starting. You have a new Fed chair versus Jay Powell.
I mean, the biggest one is in October, you had inflation bump up, October 2021. And then, you know, that gets hypercharged with, you know, the oil price shock of the Ukraine conflict.
Yeah. So it could not be more different. And I think, like, even when you think about historical ideas, and I would call the 4-year cycle a historical idea, we also used to have alt seasons. And I think the alt seasons of this cycle have been cannibalized by prediction markets. They've been cannibalized by meme coins. They've been cannibalized by flows going elsewhere. And if you think about what is driving like a 4-year cycle, it's flows. And flows are derivatives of a lot of things, but they are kind of the end-all, be-all determinant of price. And so, just to Michael's point, this global TWAP on the majors means that they are not going to be as fragile. The alt complex, it's going to continue to be really fragile, and only able to produce hyper-concentrated rallies because there's only a few things that really work. And I think you can have some sort of degree of freedom with the L1 valuations, given that if this tech is supposed to live forever, then kind of by definition, a lot of the free cash flow will be in the super, super, super far dated future. I think that of the assets that we hold, and we hold 9 figures of Bitcoin, I'm most worried about BTC. And I think ETH is our hedge to BTC. It's a smaller asset. It's proof of stake based. It has technology tailwinds. It's able to respond to computing platform shifts like AI or quantum. And just a lot of the behavior that I see about, you know, like even like the Santiago discourse, where it's like, okay, BTC, first of all, like, let's put that in a different camp. Let's address everything separately. That's exactly how people thought about ETH in 2021.
Yeah.
Just that same sort of herd behavior that has very thin logic that causes that sort of potential drawdown. So if there is a case for 60K BTC, it's based solely on the fact that everyone is so complacent about it. But I still think it does well.
Look, so I've been kind of trying to work out a thesis for like let's not say like the next cycle, but the next run up here, like how that kind of shifts.
It's time to stop thinking about
cycles. Sure. Let's just think about like the next leg up higher in the broader macro cycle. So if we zoom back to 2022, I think you guys can recall we had this idea that Bitcoin was like this kind of a pet rock. It was all about ETH, as you're saying, Vance, right? It was L1 trade. It was the Sol Luna AVAX thing. It was ETH. It was DeFi, NFTs. But Bitcoin was like, it was almost irrelevant, and it underperformed towards the end there compared to everything else. Everybody wrote it off. It went down to 15K, then proceeded to outperform nearly every asset in the entire crypto complex, except for a handful over the last 2-ish years. So I guess my question to you then,
let's just unpack that.
Okay.
So the first thing that was happening was Saylor. There was no ETFs during the 2022 bear market. He traded it below NAV very briefly and then turned the ATM and started buying. And then came the ETFs. The ETFs were like the turbo booster. We didn't know how large the TAM would be. It just lit it on fire. And then you had Trump.
Yep.
And you had Trump proclaiming Bitcoin. And now a lot of those dynamics are working in reverse. So Saylor is no longer buying a ton of Bitcoin.
Yep.
He has, in fact, raised cash to pay his debt payments. You have the ETF flows, which are still very real, but ETH has more of them.
Yep.
Yesterday was a good example. It was basically parity for an asset that's, 1/4 the size. So you have to interrogate your thesis based on flows and then work backwards from like, are those flows repeatable? Are those flows idiosyncratic? Where do they come from? Where do they go to? Are there OGs that are selling? And I think that's now the prevailing flow dynamic. And the big $1 trillion question for the market is, are the OGs done selling? Or are they going to reappear back at 104, 105K? And like, if you're Benjamin Cowan, who I think you probably listen to, you do too. Like, look, like, here's the thing about TA.
On the money, Vance. On the money.
TA,
that is so good, man.
TA is only useful insofar as the rest of the market believing it's useful.
Right.
So if you've got a market that's entirely based on TA, you better probably look at the TA. But the script that he's laid forth is it's going to hit 104K, bounce to that moving average, get rejected and turned down. So like, that is kind of the go forward scenario that you should be evaluating. If it goes above 104K, it's probably invalidating that entire thesis. So we won't need to wait for another year to figure out if we're right or wrong. We'll need to wait to see if that bounce clears.
So then,
and just to be clear, Ben Cowan has been at least up until about August was more right than wrong.
Yes, spot on.
And has been far more wrong than right.
So just kind of so thank you for explaining the dynamics there. So looking ahead, the question was kind of around Bitcoin dominance and thinking about how generally to think about that market and that kind of dynamic, because basically what I'm coming to in my kind of idea here, and I think it's built off of guys like Cowan and others, is that we had such a Bitcoin dominated run previously because of these factors, such that you've got guys like Santi just putting it in that bucket of almost like untouchableness. You've got this concept that Bitcoin will always lead and that you always need to hold Bitcoin and it's going to lead every rally. So I actually kind of think that this next run, ETH could break all-time highs before Bitcoin. I think the market could rally in other kind of sectors, whether it's hype or Sky or a handful of tokens, that we would see a lot of outperformance from these types against Bitcoin. What I can't really understand or not really trying, or I can't really kind of wrap my head around is, are we ever going to see like a Bitcoin dominance in the 30s or 40s again? Because if we're just talking about alt seasons as handful of names really performing well due to their fundamentals, then you would think that as long as ETH, as long as ETH doesn't just go pure nuclear, then we'll have a Bitcoin dominance in the 50s or 60s for a while. How do you guys think about this Bitcoin dominance construct with regards to this institutional TWAP? Will we see this down in the 30s, 40s ever again? Or kind of, how do you think about that?
Bitcoin dominance is such a troubled stat for a number of reasons, but I'd say the main one is just like the survivorship of assets relative to Bitcoin is so difficult to kind of maintain across, historical cycles. And look, I agree, like we shouldn't maintain the fact that, or we shouldn't continue to call there being cycles going forward, but we can talk about them in terms of 2017 and 2021 and now this. But generally, I would say like you can't compare 2021 and 2025 for many reasons. But number one is we pumped $5 trillion into the economy. Like that is just like, it was an everything bubble, which is why we had alt season in the first place, which is why we had inflation, which is why we had the macro, negative cycle. So like there really isn't a comparison. I would say my default reaction is Bitcoin dominance goes down. What would be more interesting is to compare apples to apples. So like ETH versus BTC or BTC versus ETH. But like you have to maintain the same kind of asset across the board, because there are things that like ICP was worth $110 billion, last cycle. It's just, you can't factor that. You can't recreate that value in this cycle, because now we're thinking about things in terms of fundamentals. And obviously there were none with ICP, and it's basically gone. But the point is, like, you can't say Bitcoin dominance across, because it just isn't the same denominator.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? InfiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. InfiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Got it. I don't think much about Bitcoin dominance at all. It's not like there's like an NVIDIA dominance marker for the stock market. And people don't invest against that. I think in a world of institutional flows, ETH is as good as Bitcoin, probably better. But the real meat of like where things are going and where the money is to be made is the altcoin complex. And I know it's just been left for dead and it's terrible and whatever, but like the Clarity Act is a catalyst, the likes of which we have never seen before. And so if you're spending time in crypto, you should be spending time in DeFi. That's basically your only hope at this point.
And I'd say the reason why is because that's where the most obvious business models can originate from. And if we're talking about fundamentals, it's all about building a business. And I think, how do we get to that point where like ETH breaks through? Andy, to your thesis on what could happen, it's actually really simple. You start with a catalyst of a staking ETF. Like right now, BlackRock is expected to launch their staking ETF maybe by the end of this year, but probably early January.
Yep.
And they have $11 billion in the ETH that earns zero yield and charges a fee. What do you think the interest will be from a staking ETF that gives you 2.5% to 3% in kind in terms of yield? Probably going to be much larger than $11 billion. Now, does that totally cannibalize the existing $11 billion? It probably cannibalizes a fair amount, but I'd say net, more than 50% of it is net new. And so that's number one. You got billions of inflows. Number two is you have the Clarity Act or the market structure, whatever that is. The reason why I think ETH and BTC have the institutional perspective that they do is because there's regulatory clarity on what these assets are, which means that institutions feel comfortable adding them and providing support and institutional adoption for them. But if we have regulatory clarity on what most of these assets are, at least an understanding, it opens the field for basically every asset from an institutional perspective. So, bring on the buying and more TWAPs for more assets. But what this also does is it very particularly, like if there was to be one index if you could buy one index asset for what the Clarity Act or market structure bill will provide, I think it's very clearly also ETH.
Yeah.
Because basically everything that we're talking about is going to be built on top of it. That's where all the business generation is. Maybe it's a little bit of Solana, but that's kind of relative to the DeFi size that they have. And so if you're someone who's wanting to make a bet on Clarity happening, I think ETH is basically the best play. Yeah,
it's still very much the home of DeFi. And I think you're echoing a lot of the things that we talk a lot about on this show, which is return to fundamentals. It's like real businesses. Those are the ones that separate from the rest. And it's the revenue meta. And the revenue meta is a pretty good indication of return to fundamentals. and something that has a foundation. And you guys have invested in quite a few companies that I think are starting from a foundational business model, a real fundamental business model. Like we had Daylight, right, on the show the other day.
Yep.
Pure solar power energy business, like solid, right? Would exist even if crypto wasn't a thing. But then you've gone and launched, or they've gone and put DeFi on top of it, and they launched DeFi, and that's why we had them on the show the other day. And so it seems to me that this new category is emerging. And so we used to talk about this barbell in terms of Web 2 and Web 3, and it was like the evolution of the internet. It feels like we're on a different barbell now. Now it's somewhere between AI and Silicon Valley, which if you get too far in that direction, it's AI slop. And then if you get too far in the financial direction, it's Wall Street
slot
and
machines.
the incumbent legacy banks and slot machine of financial engineering. And so it feels like this neobank Cambrian explosion, this neo fintech category is where a lot of these foundational business models emerge with DeFi on top. So could you guys just kind of elaborate? Is this the idea? Is this the right direction? And like kind of expand upon this concept of DeFi-ifying some traditional businesses.
I mean, look, I think tokenization is a real phenomenon in terms of business model, new business models that can be brought, through blockchain technology, brought to bear. I think Daylight is a perfect example of this. You can have a decentralized utility that uses the blockchain to adjudicate basically like energy flow as a tokenized asset with value as a payment mechanism, and have it be house to house and completely decentralized. There are companies that literally tried to do this back in the late 90s, early 2000s that never ended up going anywhere because it was just really difficult to do when you're putting all of that trust into a centralized intermediary. And so tokenization, I think, is creating new asset classes or assets that then you can build businesses around. But I think there's also an element that blockchains provide, which is distribution and cost cutting for existing businesses. And this is basically exchanges, lending markets, credit markets. That's another angle to it that I think is extremely fundamental. Another portfolio company of ours is USD AI. They're providing GPU-backed financing that typically would go through a JP Morgan or some institutional bank and only sold to qualified purchasers. You have to be accredited. You have to have, KYC to participate in these loans, but you can get access to them in a way that you weren't able to previously. And you can actually cut the cost of capital down because it's all on chain and you don't have to go through, the process of a regulated, bond offering basically. So I think that there's multiple ways to slice it. DeFi is just the most obvious, way to look at it, because if you think about from first principles, what is a blockchain useful for? What is the blockchain technology concept most applicable to? It's for value transfer. And historically, when you had, client server architecture or, basically what the internet provided, it was for data transfer. But now that we have digital scarcity, you can use blockchains for value transfer, and anything that's built around value will probably have some connection to blockchains in the fullness of time. So that's kind of the core thesis. I think it's also, frankly, what we started Framework going after. We got typecast as the DeFi fund in 2019 because nobody else was looking at DeFi, and we kind of coined that term in a lot of ways. But I think generally, like, we're going back to basics and back to fundamentals, both in DeFi but also in revenue and profit.
Vance, anything to add?
I mean, I think perfectly said by Michael. If you're still shilling attention tokens or XRP, you really should be flipping burgers, and good luck.
Appreciate that, man.
Shout out the XRP army.
Rob, actually building on your point, there was this tweet that kind of had like this tokenization stack laid out. I'm just curious if you guys see it like this. So there's a base layer of stablecoins, there's asset issuance, there's a risk layer, then there's tokenization, capital allocation, and then distribution layer. You got like the likes of M0 Circle, Apollo, Daylight, USDAI, Cork, Centrifuge, Ondo, Securitize, Maker Sky, and then centralized exchanges and fintech. I think, Rob, what you're kind of getting at is like there's this new, it's like tokenization, stable coins, fintech kind of combining here. And yeah, I guess, lads, like from your perspective, is this the stack to pay attention to for 2026? Like, is this where value is going to be actually created at scale. Why not? Just kind of generally how you think about this stack.
I would say, and I got to hop after this, but so the Daylight and USDAI products, I think, are incredible from a yield perspective and credit quality perspective. The things that everyone will struggle with is duration. And I think for a lot of the new stablecoin projects that are coming out, they can use Sky as, a buffer for duration. And what I mean by that is Sky can be the really sticky capital that is patient, that doesn't withdraw, that can help you build out a book of business that can sustain a 2 to 3 to 4 year type loan arrangement. I am very doubtful that a lot of these will be able to do it on their own. And so in many ways, just like Sky wants to create good sources of yield, I think a lot of these yield coin want to create sources of duration that are outside of them. And you've seen Athena draw down from like 15 billion to 6 billion. I think it's, going further down. If that happens and you are like financing a solar panel with that money or a GPU, you've got a really serious issue, and you need to sell those GPUs at fractions of the cost and take bad debt hits. And so like the duration idea is a very important one as we go into 2026. And so I think a lot of these yield coins will be really solid so long as they can partner with Sky to kind of build that base of very sticky capital. I think if it's all consumer money and it's easy come, easy go, it's going to be really difficult and prone to failure. So, very, very bullish on both Daylight, USDAI, trade finance, people who are building home loans on chain. Duration is really the product of 2026 to be figured out. And I think a lot of it comes with having a partner that is larger scale, more patient scale, can make your yields liquid, and maybe not pass through all of it, but pass through enough where they're able to build consistent duration in their book and pass it down to you. So I know that's a pretty esoteric concept, but just something worth the audience understanding as these yield products become more and more distributed in the marketplace.
Yeah. Meanwhile, was another one that came on the show recently, and duration is the name of the game when it comes to life insurance. So I think
exactly
they're providing that as well. And I take a Clarity Act is probably going to be pretty friendly to this concept of yield coins. Maybe is there any insight you guys have on how Clarity?
We're gonna let you go, Vance.
Yeah. Thanks, guys.
Thanks, Vance.
In terms of Clarity, I think it remains to be seen. There's still a lot of nuts and bolts that need to get figured out with Clarity. I think the base understanding is that there will be some sort of offering for a yield coin, whether that is some Rate D type offering where you have an exemption for a securities offering, as you would with many fundraisers for equity-based companies, or there's something that's new that's created. I think both Paul Atkins at the SEC has kind of signaled that they want to build some sort of sandbox or kind of regulatory program that allows for experimentation, or it's Clarity that defines this and pushes it into law immediately. I think either way would be great. But generally people understand that we need to have some sort of crypto native security exemption, but that these are going to be valuable assets. And I think the element that is going to be really interesting to watch in Clarity is whether or not yield can get passed back. I think that they're going to officially kill that in Clarity, which even further pushes these yield coin DeFi native opportunities out. So a lot of moving pieces on the periphery, but just going back to it, I think getting this done substantiates a lot of the future growth of this industry, and it's all going to happen probably pretty quickly in 2026. Yeah.
Awesome. Mike, thanks so much, man. Appreciate you coming on. And Vance, as
you guys are on the nominees for Best Hair Award here for Roll Up TV holiday season. So stay tuned. Yeah. Thanks, guys.